everyone. Thank you so much for joining us today. My name is Aeryn Cagle. I'm an associate on the investor relations team here at the Newchip Accelerator. So during this demo day, we want to take some time to really highlight some of the IR's team's strongest relationships and some of our favorite investors here at the Newchip Accelerator. So joining me today, I have Will Stringer, who's the founder of Chisos, and Doug Stewart, who is the founder and managing principal of DS5 Venture Group. So guys, I'd like to start off by saying thank you so much for taking the time to chat with me today. I really appreciate it.
Thanks for having us.
Yeah, happy to be here.
Super happy to have you guys here. So I'd like to start kind of by diving a little bit deeper into what exactly you guys do. Will, you're the founder of Chisos, which provides capital to entrepreneurs at the early stages of their businesses by kind of utilizing an income share agreement. Can you tell me a little bit more about that, kind of your process, and a little bit more about why you use income share agreements?
Sure. So our process is what we kind of consider an alt VC. So we're not pure equity. What we've built is investment terms that, like you said, utilize an income share agreement. So there's two pieces to our investment. One is the income share agreement with the founder, which is kind of a debt equity hybrid instrument, fairly flexible. It's been used in the education space for about 5 years now. And then the traditional kind of equity safe note in the business. And the way we've structured it is a little bit unique, where if you're earning money, if you're earning over $40,000, you make payments on the ISA. But when you're making payments on the ISA, you're actually buying back some of your equity. So we've got some founder-friendly features in there that help us be able to make those investments at the earliest stages. We can actually invest kind of pre-traction, napkin drawing idea. We can invest at that point. A lot of times we look at the founder in our diligence. Kind of 70% of our diligence is focused on that founder. What have they accomplished in the past? What is their background? What is it they're trying to do with this business? So that's kind of how we invest.
Absolutely. Can you tell me a little bit more kind of, you said founder, but what are some other criteria that you really look for when looking at a company? Like, what is something that sparks your interest? When you see this, you're like, that's a company I want to talk to more.
Yeah. So like I said, our first kind of criteria is the founder. Have they done something in their life that is, impressive? Have they demonstrated some type of ambition? Do they have some kind of background that makes them well suited for the business? Kind of after the founder kind of passes those criteria, the businesses we look at are pretty wide ranging. It's easier to say what the not businesses are. It's not capital intensive businesses that are going to need, tons of upfront capital, just because our check sizes are, $40,000 on average. And so we're looking for businesses where we can come in, write that first check, and that first check can get them to an MVP or a prototype or their next milestone by which they can either start growing organically or go raise their next round of capital, if they're going to choose the venture capital route.
Yeah, absolutely. And I'm glad you mentioned so much focus on founder, because that ties in very well with what Doug looks for. So Doug, DS5 is a venture capital firm that invests, again, in early stage companies created by atypical founders. Can you tell me a little bit more about that and kind of what does atypical founder mean to you?
Yeah, no, I'm glad you pointed that out. And our focus is the founder, right? So we're looking for software ideas, tech companies that excite us, and that's more of a traditional VC structure. But the big thing we're looking for founders that just haven't had the traditional path. So it's not the we went to high school, straight to college, came out, and now we're sitting in Silicon Valley and we're launching a tech company. And we're looking for founders that they could be a first-time college grad. They could be a single parent, child of a single parent. They just, they've had to overcome, obstacles in their life, and that ambition inside of them they just continue to drive forward. So we think that those founders actually, they bring a lot of value to the table because they've already shown that, that ambition and ability to overcome obstacles. And the ability to adapt, which is in a startup environment, it's all adapt and overcome, right? So this allows, we look for founders that have a demonstrated path by doing it by stuff they've done in their personal life.
Yeah, that's fantastic. I like that both of you really mentioned talking about the founders and talking about their backgrounds, either things that they've accomplished or been through that have kind of led to their ability to overcome things and persevere. So let's take a couple minutes then and talk about your backgrounds a little bit. You're both founders of companies that want to help the entrepreneurial community support early stage businesses. So Will, what were you doing before Chisos, and kind of what led you to that?
Yeah, so my background is finance. Went to school actually down in Austin, UT. Went out to Houston, did banking for a couple of years, and then worked at a family office for 4 years on that investment team. And so at that family office, I got to see deals all across the spectrum: private equity deals, venture capital deals, public equity deals. And when we did those deals, a lot of times we would sponsor a new manager, sponsor a new team to either raise a fund or build a company. And towards the back half of that time at the family office, I really gravitated towards the startup and venture space. And so when I kind of moved out from Texas to California, was looking to really get into the startup space, started thinking, all right, how do I start helping founders, start helping people build their company? Obviously, that's what venture capital does. But as I started looking at venture capital specifically, I've noticed, there's at least a majority of venture capital in California. It's kind of an insulated ecosystem. And so, even just being from Texas, being from outside that Silicon Valley ecosystem, it was going to be difficult to break into it. And, I kind of had this idea of using alternative terms, things I saw Indie VC doing interesting things. I saw Earnest Capital doing interesting things. And then using this income share agreement, I thought was a perfect instrument for entrepreneurs. And so kind of just backed into being a semi-venture capitalist, using these interesting terms to start helping these entrepreneurs that otherwise wouldn't be able to get funding in most cases.
Mm-hmm. Yeah, I think that's great. And you're definitely right about, earlier stage businesses maybe having a more difficult time with that funding, especially that first check. So you talked a little bit kind of about what moved you in that direction. Was there ever, do you remember a time where you're like, I need to start this, I need to do this kind of thing?
It was kind of a gradual thing. Kind of late last year, I took that idea of the income share agreement, the thought of, hey, this is great for students that are coming out of college and have a little bit of an unknown income earning period of time, and thought, that instrument could be really good for entrepreneurs who also are going through this period of time where they don't know what their income is going to be. So, in that situation, you don't necessarily want to take on debt because debt has fixed payments. And so this income share agreement is much more flexible than that. So I think taking that idea, kind of playing with it, talking with some lawyers and trying to figure out, how could that be formed into investment terms, that all kind of just slowly took place over the end of 2019. And then kind of January 1, I thought, let's just kind of go for this and see how far we can push it. And so far it's been, some really good reception as we've talked to founders and, other investors or just other people in the startup ecosystem.
Yeah, that's fantastic. Kind of same question to you, Doug. Can you share with us a little bit more about your background and kind of what put you on this path?
Yeah, no, my background's, it's been a really fun path for me. I'm born and raised in the Midwest, just small little farming communities in Illinois. I eventually joined the military in order to go to college. I was able to travel the world quite a bit. And after the military, I did some basic sales positions. I didn't even go back to college until I was 27. So, this very non-traditional path, which is, very much the type of founders that I'm looking for. Eventually I went and got my law degree. I'm a practicing attorney. I also have a background in accounting. And I quickly, after law school, I started working with a lot of small businesses, and I realized that they needed basically this all-encompassing back office support, because it's one thing to have an idea, but everyone has, well, what do I do with an idea, right? And how do I bring that to a tangible product or company or whatever the case may be. So I just started working with founders in any way that I could, and quickly realized that their biggest issue was access to funding. Everyone's trying to pull from the founder, and no one's trying to provide those additional resources, and not in the way that that VCs are, right? Like VCs, we're coming in and will you do the same thing? You come in and you provide all these additional avenues to backstop where they need, so they can focus on getting that MVP, and obviously getting to that revenue generating state. Because then at that point, then that's beneficial for everybody involved. So that as I transitioned from the law practice into institutional investing, I got the opportunity to work with a couple institutional funds, and seeing that there's this wonderful, great, positive ecosystem that is all designed to provide those resources to founders. But obviously, at the end of the day, the biggest issue is access to capital and visibility, right? So I think our job as venture capitalists is not only to write a check to get them started, but then also to run around just bragging about how wonderful they are, and that increases their visibility, and then obviously that makes them more attractive as they go into these later stages of series funding.
Yeah, absolutely. And I love that both of you, once again, you kind of mentioned like one of the main mindsets of being an entrepreneur. Like you saw a problem, you saw, a problem with the way that funding is going for these businesses. A lot of businesses have potential, but aren't able to get that exposure or aren't able to get that funding. And you guys went out and devised plans to fix that and have started pursuing it. I think that's fantastic. Let's talk a little bit. I know both of these companies are fairly new. Will, you said 2019 was kind of starting point. Doug, I think you're mostly starting this year. Let's talk a little bit about if the pandemic has affected your companies at all. Have you guys met with less companies? Have you seen a shift in the investment? Have you shifted your investment approach at all, or anything to that effect?
It's an interesting time, and everyone's got a different position. I actually think the pandemic is going to be great when it comes to innovation. There's, the pandemic has just caused us to slow down, and there's a lot more time to sit and there's this really interesting idea I've had, I've been thinking about for the last 5 years, but now that I'm not running around doing all the normal day to day because I'm forced to be more stationary, well, why not put a little bit more time into kind of incubating that idea and bringing it out? So I think the pandemic has worked out very well. And for me personally, I've been sitting on this idea for probably 2 years, and I never really was able to hone down on what my investment thesis was going to be and where I had the best chance to generate an impact. So as the pandemic hit, I had this wonderful opportunity, and I effectively got to the point where there's really no reason for me not to take this step and launch a company. I think a lot of founders are now getting to that point where I don't really have a reason not to do this at this point, right? I can come out of this pandemic and be exactly where I was when I went into it, or I can create something truly, innovative and inspirational. So let me just take the shot and see where it goes. And once you start getting traction, step one is making the commitment to taking, to starting it. And then of course we start to work through the napkin drawings and all that fun little stuff. And then eventually, you're getting to the point where you have an MVP and you're bringing all that stuff in. So I think the pandemic is great for launch. And there's, record numbers of companies that are being formed right now. So, in the next 6 to 9 months, I think there's going to be a lot of really cool stuff coming down the pipeline that we can really grab a hold of and run with.
Yeah, absolutely.
Yeah, 1000% agree. I think the stat that amazed me was, Q3, I think 40% more business creations or business starts than the same time last year, just on the US, census website. The pandemic, as everyone says, really just pulled all the innovation forward that was already happening. I think that continues, but I also think, like Doug said, there's a lot of people that are either taking a hard look at, the job that they're doing. They have some free time. They're going to work on a side project or some, company that they've always had this idea about. Or two, unfortunately, out of necessity, there's probably a lot of people that are thinking, well, one, they've been laid off, but they have this talent and they, know what problems that they've faced in their previous jobs. And so, they're going to go try and make their own way, depend on themselves, start their own business. And, I think it's really good for the entrepreneurial system. I think I'm excited about all the different kind of capital experiments that are happening now. Like I said, companies like, Indie VC and Earnest Capital, and you have, the revenue financing companies, and all of these capital experiments that are happening only help entrepreneurs get that capital to grow their business. And I think the whole thing is an exciting time for entrepreneurship.
Yeah, I think there's a lot of opportunity that's coming up just from as an investor. I mean, a lot of these, more institutional style funds, they've kind of graduated to later stage investments. They're getting away from the angel and the seed rounds and even the Series A, and they see their growth occurring, Series B and later, and getting into pre-IPO kind of positions. Which I think, and I saw that as a huge opportunity, and that's why I decided to even launch during a pandemic. Fundraising is one of the most difficult tasks you can even take on. But then doing it in the middle of a pandemic is, you have to have this delusional confidence you can pull it off, which is what you want from your founders too, right? But I think there's going to be a lot of opportunity, especially over the next 12 to 18 months, for institutional investors to really step in, get behind these companies, incubate them, and you'll see this next wave of unicorns coming very, very quickly.
Mm-hmm. Absolutely.
Yeah, I mean, just the problems caused by this disruption are opportunities for these entrepreneurs. You had the status quo, for a period of time there was innovation, but this massive disruption on all fronts just causes new opportunities and new problems to be solved.
Absolutely. And I think that's so important. I think it's another kind of characteristic that you want to look for in a founder is that ability to persevere, that ability to look for that silver lining. I mean, like you said, turning problems into opportunities. I mean, that is kind of a sign of somebody being able to be a successful entrepreneur. You need somebody who's able to have that resilience. So let's kind of shift a little bit and talk about some of your interactions with Newchip. Both of you have been very active with investor office hours, meeting with companies. So I want to talk about that a little bit. Doug, kind of starting with you, you've met with a lot of Newchip companies. Can you tell me a little bit, I'm sure you've interacted with accelerators in the past. Can you tell me a little bit about maybe how we do things differently or kind of your experience meeting companies through Newchip?
Yeah, no, Newchip has been a pretty wonderful experience. I got turned on to them through a colleague, and he's, this is a really great opportunity to sit and just provide, it's from an investor standpoint, you get to look at some good companies, but then also you get to develop some mentor relationships, and and I've done several office hours at this point, and the flow is really wonderful. It's very easy to get in. And sit down and take a 20-minute process to get familiar with the company. But one thing I will really commend is each one of the companies that I've actually been able to interact with. I mean, I think I have follow-on relationships with almost all of them. And I have a couple of them that I now have a bi-weekly mentorship call. And it's just a touch point to see how they're doing. From the investor standpoint, I mean, being able to sit and have a continuing relationship with that founder, it's a lot of value to them because they just want someone that they can bounce these ideas off of and work through it. But then the other side of the point, it gives us a chance to have this longer due diligence cycle to where I get more acquainted with the founder, and then that way when they hit these next funding rounds, then it's much easier for us to make a decision to participate in that round because now we've had months, if not a year, working with that founder, and we know we're very intimately tied into what they're doing.
Absolutely. That is so great to hear. That's exactly what we're hoping for. We want to make those connections and kind of help our companies get exposure to investors and meet mentors, etc. What about you, Will? I know you've done a lot of office hours as well. Do you have any kind of insight on how that goes? If you like doing investor office hours, a little bit more about working with Newchip.
Yeah, the investor office hours have been great. As an investor, it's a lot of times about reps. So it's, seeing new companies, talking to new founders, trying to see, build some sort of pattern in your mind on, these are the types of companies that, go a certain way, et cetera. And so just talking with those founders and hearing about their companies, hearing about how they're growing those companies, helps me think about, our current portfolio, or maybe, how to help those specific founders, and really just connect the dots between founders and, mentors, advisors, or service providers. I think I really enjoy, like, my favorite part of the job is helping founders and making those connections, or maybe, bouncing ideas off of each other and trying to figure out, how do they reach that next breakthrough? What direction should they go, launch their product? And so that's been the best part of office hours, is just getting to talk to entrepreneurs. There's no expectation there. I mean, they're not, necessarily, yes, they're giving me the information on their business, but it's not a formal pitch expectation. And so you can just have a general conversation and help the founder think through any problems, answer any questions that come up. So I've really enjoyed office hours.
That's fantastic. And like you said, yeah, it's a little more focused on networking and building those relationships, and we want them to be lasting relationships. So it's really an opportunity to get to know the founders, as opposed to just, looking at the pitch deck or just listening to their recorded pitch. You really get to understand, like, both of you are very focused on the founders and their backgrounds and who they are and why they started their business and, like, what ability they have to be successful. And so, meeting one-on-one with the founders and just kind of chatting about their business and having their information ahead of time kind of gives you the ability to see that, to take that relationship to the next level.
Yeah, 100%. It's something that, was beneficial to me, just talking with people as I was, building Chisos or fleshing that out. And so being able to kind of help people on the other side of that, like I said, my favorite part of the job.
No, I enjoy that too. One of my favorite things is when you get a follow-up call and they're like, hey, we brainstormed this idea last time we talked. I implemented that, and it's been a very positive reaction. And then I was just so excited to tell you, how much that impacted, our process and our flow going forward. So that's a very rewarding part of it as well. And it's cool to because you do for us. I mean, we jump from business side idea to idea, and you get lost in that, and you do look for patterns as far as like a recognition standpoint. But one of the things that we're focused on is we're valuing the founder, right? It's all about the people and how we value them. So for us they really appreciate us dedicating time to them, and whether it's an hour or 2 hours, and just being in that moment, and vice versa. Like it's a big deal. I appreciate the struggle that they're going through it, and it's a from the time they wake up to the time they go to bed, they're 100% focused on their idea, and they're bringing in for them to dedicate that time to me. So it's a very rewarding relationship going back and forth.
Absolutely. That's fantastic. That's, like I said, exactly what we're looking to hear, what we want to see come from office hours and investor meetings that we facilitate. We talked, I guess, a little bit, both of you kind of mentioned mentorship and building those relationships. So it kind of got me thinking, I mean, both of you are entrepreneurs, you're starting businesses, helping the entrepreneurial community. Do you guys have any, when you think of mentors, do you have anybody that just kind of pops into your head, like, this person, inspired me or pushed me to do this, to kind of chase my dreams, that kind of thing?
My big thing, I grew up, my dad had his own business. And so I always saw kind of building a business and thinking about, how to grow a business, how to, help people, help your employees, really create a good environment for others, and, also building a prosperous business. And so that entrepreneurial mindset was kind of always with me as I was growing up. So I'd say that was kind of the first big thing, is I always figured I would be an entrepreneur at some point. And then the other point, or I guess the other person that would come to mind, is just, my boss at the family office was fairly entrepreneurial. I mean, we would, look at all types of deals. We would try and structure, all types of different deals. And taking that mindset of kind of entrepreneurial investing, is really what helped me kind of go down the path of Chisos and create a new investment, contract or investment terms to help a new class of founders, that, that very earliest founder. And so, that's kind of what inspired me to come down this path. And then, I'm taking that and trying to help other entrepreneurs, because I know what that, desire to start your own thing and, be successful and build something that you can call your own. I know what that feels like. And so I really, really want to help those entrepreneurs kind of reach that level of success and build that, idea or business that they're trying to go after.
That's fantastic. Yeah, I think it's really important to remember like the people that inspired us, the things that inspired us, and then to try to pass that along to people in the future. What about you, Doug? Does anybody come to mind when you think about a mentor?
Yeah, I have a few people in my life that have, really been good mentors for me. Probably the biggest person that stands out right now is, I have a friend of mine. She's been wanting to launch an educational platform for a long time, and we both kind of hit this period to where like we're not happy with where our current jobs and our career progression. So we really wanted to take on something new. And we've started this morning. Every morning we have a standard call, and it's just kind of a check-in point. And we use that to brainstorm and work through ideas. So as she's launching her educational platform, and then I'm launching my venture firm, like that mentor relationship has probably been the most valuable for me. And it's one of those things to where like it's this completely unfiltered conversation where I can throw everything out there and then start picking through things, and then of course that allows us to better hone in on our paths and how to shape our respective companies. And I think that's probably been the most rewarding mentor relationship that I have right now.
That's great. Yeah, I can definitely relate to that a lot. I think kind of that peer mentor is just a really valuable role for someone to play in your life, to have somebody that's, a friend and a mentor that you can kind of chase your goals together, kind of bounce the ideas off of, and just come to with any problems and just kind of work together on things. Let's talk a little bit more. I want to come back to kind of the founder focus, because I love that both of you guys are focused on that. And I wanted to ask, I know I asked both of you a little bit about kind of what you look for in a founder, but let's take that to the next level and just answer if you could have one kind of characteristic in a founder, what would that be? Would it be, leadership, ability to work in a team? Would it be that they're resilient, that they can persevere? What would be the number one quality that you think is important to a founder to be successful?
Doug?
Yeah, no, I don't mind going first here. I think the biggest thing for me is how they value people, how they value their employees, their co-founders, how they value their end customers. I mean, that's probably the biggest thing that I look for. We're in this spot where we have a lot of social awareness and social conscious that is in place right now, and I look for founders that have that, right. And Newchip has turned me on to one really, really great founder to where like they just, it's the way they value people. Like I see the ability to do good. I want to have all the right processes and policies in place to where I have this really great company on the inside that's very nurturing and it brings out the best in everyone. But then also when I look at my end customer, like, I want them to take a lot of positive energy from this as well. And those are the founders that I look for. And it's really interesting because everyone has talking points like, oh, well, I do this as social awareness, but they really don't, right? It's purely a talking point they put on their website. So I look for founders that value, they just value people, right? And regardless of where those people come from, there's no end game. It's just I value people and I want to do the best I can for the greatest amount that I have. And that's probably the one trait that I look for the most. That's
fantastic. What about you, Will?
Mine's probably grit and resilience. So I guess kind of like Doug was mentioning before, you have this whole swath of founders that's, generally been overlooked to date. I mean, you look at the data, most funding goes to, New York, Boston, California. Most funding goes to, Caucasian males. And so you have this whole geographic and demographic kind of segment of founders that have not been funded, typically because they're not well networked or not kind of in the right circles. But a lot of those founders have extreme resilience, extreme grit. They've overcome whatever. Maybe they haven't started, a nonprofit or built a successful business before, but they've, overcome, being a single mother or overcome, losing their parents. Or I think I'm taking talking points off of Doug's website because I just read it before this, but there's some serious grit in those experiences. And so when you kind of combine that grit and resilience with somebody working on a specific problem, to me, that's kind of the most important thing, because they're going to break through walls to get that thing done because they believe in it and because they just have that resilience and desire to succeed.
Absolutely. Yeah, I actually really think that those tie super well together, because I think it actually was you, Will, that I was talking to at one point. I think I asked you a very similar question, and you were kind of talking about how you want a founder who has a reason to succeed. Like, you want them to be very involved in the concept of their business, to have that like determination, resilience, like grit to succeed. And I think that comes back a lot to valuing people, because a lot of the entrepreneurs that you see that are extremely successful, they have that grit because of how much conviction they have to their idea, how much they are passionate about the idea. And it normally comes down to they want to help people, or they want to impact people. They want to make a difference in some way. And that kind of drives their grit and drives their determination.
Yeah. And I think, the great thing about our model is we don't necessarily have to look for that $100 million revenue, billion-dollar company. So the TAM can be smaller for our investment because we have that income share agreement. We're not basing our returns off of kind of the power law venture capital portfolio. And so we're fine with somebody going after, a quote unquote small market of 100 million or 50 million or something like that. But if they have that grit and they are solving a problem that like is personal to them, or they have some information about, we want to back those founders.
No, I agree. I think there's a lot of really great numbers to where all the funding does go to California, Boston, and New York, right? That's where all the funding goes. But those companies also fail at a much higher rate than companies located across the Midwest and in North America generally. There's this. And I try to digest this all the time and try to put but if you look at a company that's founded in the Midwest or anywhere else in the world, I mean, their economies or scale are very, very different, and they're not going to be the Facebook or the Twitter or whatever, these large, but they're very profitable businesses, and they're very valuable, and they generate great returns from an investor standpoint. And those founders, if they were in California, they could create the next Facebook, right? They could create the next Uber, but they're not located there, right? So they have a great idea. It's just not visible because nobody's really looking for it, So, and that's where, both Will and I, like our thesis is all about finding those companies and then just helping them become what they can. And that's where I think we provide the greatest value.
Yeah.
And that visibility is changing too. I mean, you have obviously Steve Case has been doing his work for a couple of years, but you have, more and more kind of Twitter visibility or, different groups, like Doug, that are setting up shop in the Midwest or, not on the coast. And so it's changing quickly. There's more capital, more visibility going to those companies and those types of places, but it does take time. It takes a long time.
The other point to that is this, where the pandemic has really shifted things, is the way we look for it, right? I mean, it used to be you found a company, then you started hopping on planes and having face-to-face meetings and all that kind of fun stuff. And I think now this overall, we've just abandoned that to some extent, right? Especially in the earlier stage companies at smaller checks, we're mitigating our risk much better. So we're coming in small check first, incubating a little bit, and then coming in with larger rounds. And that negates some of that upfront due diligence that we have to do, and it allows us to focus on a greater, globally, right? I mean, it's very easy to get on a conversation with someone from India. I had a conversation with someone from Dublin last week, and really great ideas that if I was stuck in the old, I have to do it face to face, I never would have met with either one of them. That's two great companies that I would not have gotten any visibility to. But because of the way we've shifted to more of an online presence, and our due diligence cycle has shifted as well, and our mitigation procedures have shifted, that allows us to see many, many more companies, which in the grand scheme of things allows us to better pick the right ones and increase our portfolios.
Yeah, absolutely. And here at Newchip, we're very conscientious of that barrier of meeting in person, which is why we are a fully remote accelerator. Is we want to be able to have that global presence and impact. We want to be able to bring that innovation to everywhere around the world and bring that funding there as well. We want to make sure that like you said, you can still meet with people that are outside of the US. You don't have to hop on a plane, that they can still get access to an accelerator without relocating, et cetera. So that's another one of our main goals here, you know, to increase innovation, to help the entrepreneurial community, just by being a little more just focused on being founder friendly, being investor friendly, and making sure those relationships and meetings can happen regardless of geography. So you guys talked a little bit, you know, about grit, about valuing people, about determination, kind of how all of that fits together into pushing your businesses forward. So let's take a moment and talk about goals. Will, we'll start with you. In 1 year, what is some impact that you hope that Chisos has, or something that you guys accomplish within the next year?
Yeah, so our goals are pretty tangible on the investment front. You know, next year, so kind of backing up, we ran a pilot program in the spring of this year, had over 75 applicants, ended up whittling it down to 4. We've made 4 investments to date. We're kind of raising our next capital vehicle to deploy. And next year, our target is 100 investments. So we want to make 100 investments into entrepreneurs. You know, the year after that, 250, and just kind of scale up from there. And so really, we're hyper focused on 2 things next year. This is kind of after we get the vehicle raised. 2 things next year is, 1, really building out robust systems internally that allows us to source candidates from, you know, all over the United States. You know, the more we can source, the more we can kind of really find those solid opportunities. Second is that kind of technology stack will help us underwrite very efficiently. Writing 100 checks, doing diligence on probably, you know, 500 different opportunities. We've got to have a robust system in place. And then 3, just kind of the support system post-investment. So we're trying to build somewhat of a community so that we're not just that check writer. We're also helping make the connections between service providers, advisors, mentors, you know, upstream investors, or even accelerators like yourself that, you know, provide that educational component to help founders get to the next level. So that's our goal next year, is really building out that technology stack to help us operate efficiently. And 2, the kind of tangible number is 100 investments for 2021.
Yeah, that's fantastic. Yeah, I love hearing about kind of short-term goals because they're oftentimes so specific, like you said, 100 investments. So my follow-up question is a long-term goal. Doesn't have to be specific, but kind of what's the vision? What impact do you want to have, you know, 10 years from now, 20 years from now? Like, what do you want that to be?
Yeah, and that's the exciting one. You know, to not bury the lead, our long-term goal is kind of more of a global marketplace, utilizing, you know, the terms that we've come up with. Backing up to kind of explain that. So because it is new, using an income share agreement for entrepreneurs, you know, combined with equity, that's got to be proven out. We're fairly certain it works, you know, the numbers pencil out, but we have to get a track record. We have to make those investments. We have to see those, you know, entrepreneurs and how that asset works in order to get people comfortable with the terms, get capital flowing in. But really our long-term goal, because today we're only investing in US entrepreneurs, and that's because the income share agreement, you know, the legal framework around income share agreements is, you know, all over the place, all over the world. And so we're focused on the US today. But we think that idea of, you know, allowing capital to come in to an entrepreneur's company using income share agreement and equity de-risks that opportunity a bit. And so we think there's a real opportunity for entrepreneurs anywhere to just use these terms or use this framework to raise that, you know, friends and family round or that very first check. So our long-term goal is to use our underwriting capabilities and our kind of servicing and community capabilities to expand globally, maybe move out of the principal investor seat in certain situations or certain jurisdictions, and just facilitate that capital and that entrepreneur connection on a global scale.
That's fantastic and super exciting. Doug, kind of same questions to you. What is in 1 year kind of your goals?
Yeah, no, this is an important question, right? And I think every founder has to, they got to know where they want to be in a year, 2 years, those kind of things. We're currently going through the raise process for our first fund vehicle. In a year, ideally, that raise is complete, and we're already going through our first, few investment cycles. That's the short term. I've already, the team is pretty well picked. I'm just ready to start bringing them on board once we get the fund vehicle done. And then, of course, we start implementing this strategy. One of the core components of what I'm doing is, every person that's a part of my firm will have to, they'll just have to take 10 hours a month and just go, do some kind of outreach. And I'm less concerned about what the outreach is, as long as it's something that they believe in. So I'm hoping to have that established. And part of my outreach will be, I want to set up a veteran business incubator that I can really nurture so I'll, try to do some kind of office share arrangement or something, and let them come in and take 6 months and go from the napkin sketch part of it to more of a tangible business structure. They're working on their MVP, that kind of stuff, and kind of set up something along the lines of a 6-month incubators. So that's the short term, kind of transitioning from just purely the capital raising portion to the investment, and then obviously the mentorship, and further kind of expand on those. In a long-term sequence, the goal here is to obviously get the first fund vehicle, and I intentionally picked a more traditional VC concept because it's hard enough to get people to look at these types of founders, right? So I didn't want to scare them away because of the vehicle that I had. I wanted them to be able to just focus on the thesis itself, and yes, that fits what we're trying to do, or not fit what we're trying to do. I'll move to the next. Obviously, raise a larger fund is ultimately the end goal, and get to the point where we're trying to do whether it's 50 or 100 investments a year, but have those get that sequence set up where I'm on the second or third fund at that point. So that's the the long-term vision.
Fantastic. Those are great goals. Super exciting. Kind of as the last question that I'd like to ask today, and I like to ask this to anybody I'm talking to or doing a panel with or anything, because I just think it's a very important question to kind of focus on purpose. So if you guys could leave everybody watching this, every entrepreneur, every investor, every aspiring contributor to the entrepreneurial community that's watching this with a piece of advice, what would that be? Like, what advice would you have wanted when you were getting started, or, has really impacted your life?
Doug, you want to go ahead?
I think you hit the nail on the head. I think purpose. Find your purpose and build a business around it. And that's effectively what I've done. Just find your purpose. Find a way to get to a point you can have a comfortable life and take a risk. Build your company. It's a fun process. It really is. It's scary and terrifying at the same time, but it brings so much positive energy to your life. So just take the shot and run with it.
Yeah, I'd agree. Purpose, and then I'd add fun as well. In order to be an entrepreneur, it's, like Doug said, very difficult. There's highs and lows, and it's a grind at times. And if you don't have that purpose, that kind of North Star of why you're doing it, a lot of times it becomes hard to continue on. Then the other thing is you want to have some fun with what you're doing day to day. Your job is usually going to take up a lot of a percentage of your waking hours in your life, and so you gotta enjoy what you're doing. And that's combining those things has helped me really move forward in Chisos and kind of craft the business and the outcome how I want it to look. But yeah, I would say purpose and fun.
Yeah, no, it's an interesting point. I try to tell all the founders that I interact with, like, when you hit a milestone, like celebrate that milestone. Take yourself out to dinner, and then tell everybody at the table how wonderful and exciting that is. And then when you have a setback, mourn that a little bit, right? Like, rehash it, figure out where you can learn from it. But then you wake up tomorrow and you go back to your North Star and you continue driving forward, and experience those emotions. It's the process of launching a startup is very rewarding, and you get a lot out of it. But you gotta take the ebbs and flows and on both sides and experience those.
I'd add one more thing, another kind of hyper practical piece of advice would just be, don't be afraid to kind of look stupid or ask the, quote unquote, stupid questions. Nobody knows what they're doing. And if you get on Twitter and you see everybody just nailing it out of the park and you think, wow, am I the only one that doesn't know whether I need to set up a LLC or a C Corp? Like, no, nobody knows. Most people don't know what they're doing. So ask the question, like, go find someone, ask the question. Don't feel embarrassed by it, because when you ask those questions, you get the answer quicker and you can iterate faster and you can, reach success faster. So just ask the question. Don't be embarrassed that you don't know something. Most people don't know most things when it comes to starting a business, just because it's a hard thing to do.
Yeah.
Well, guys, that is very insightful, wonderful advice. Think that everyone watching this will definitely take that to heart. I know I definitely will. Thank you so much for taking the time to talk to me today, and adding that advice there at the end. I think it's a great note to end on, to leave. So yeah, thank you so much.
Yeah,
Thank
thanks
you, Aeryn.
for having. Yeah, well,
and thanks, Doug. Yeah, great to talk to you both.